The management or ownership of KSTP-AM 1500 ESPN.
This is the place to talk about everything related to the home. Buying or selling real estate, financing and improvements that can help increase your home's value. This is Minnesota Home Talk on Score North. Here's your host, Jason Walgrave.
Good morning, Twin Cities. Thanks for tuning in to Minnesota Home Talk here. We're here every Saturday morning, 7 a.m. to 8 a.m., bringing you the current events in mortgages, real estate, credit repair, home insurance, anything and everything dealing with your home. We cover on this show here. Again, every Saturday from 7 to 8. If it's your first time joining us, thanks for tuning in. And you might be actually on the podcast or watching us on Facebook Live right now. If you're on the radio and you're driving around, be careful out there. We saw the salt trucks this morning.
Yep.
Jerrad and I, we ended up...
You're joking.
I swear to God. On the way this morning, so I pulled up on 35. I passed Jerrad.
Which is normal. I don't drive fast.
Gave him the honk. Gave him the honk to follow me, and he didn't.
The New York wave.
Yeah.
Get out of my way.
And so we're going, we went around the 35 mile an hour curve there and then got on 94. And as soon as we got on 94, there were salt trucks.
Yep.
We followed the salt trucks the rest of the way up there, all the way to university.
You know, so we had our family dinner. We do it once a month where all the siblings get together and everything. My sister was saying, this is the worst. This is the absolute worst. We're going to go right from summer to winter. There is no fall this year. And she's absolutely right. Because it was 90 degrees on Tuesday. That's when we were having dinner.
Right.
And now it's like, oh, yeah.
Yeah, and then, just
winter wonderland
later.
yesterday morning.
It's, you know, people think we're nuts living here because we got friends in Florida. You know, and I think they're nuts for living there, right? Mm-hmm. What just happened down there? I'm like, why would you live there? Type of deal. You know, and then all of a sudden it snows on October 14th up here. And so I sent them a little video. It's like, hey, you know, good morning. You know, we woke up to snow this morning, and they're like, you guys are nuts. Why do you guys live up there?
Yeah, you know what, though? I got energized from it.
I like it.
I woke up, and I was like, woo, all right, here we go.
Everyone, you know, Facebook feed was just all, you know.
Jerrad's a weird guy.
I am weird.
I'm sorry, everyone out there. Jerrad's weird.
I am a different breed.
I liked it though. I'm an ice fishing guy. It's like as soon as that fall fishing shuts off, like when I go out there and I really don't catch much on our lake doing my summer type of fishing stuff, I'm ready.
I generally prefer winter to summer in a lot of ways. But what I don't prefer it for is commutes.
Yeah.
You know, it's not a big deal leaving home if your car's warm from being in the garage, but man, getting into the car and it being cold, those of us that don't have remote starts in our car,
yeah,
winter's rough, man.
I would say that if I had to park outside where you got to start it early, especially if you don't have a remote start, you got to run out there, you got to start it early, and you got to do the scraping.
Get the old scraper out.
Get the scraping going. I would agree with you. I'd probably
plow block the end. Yeah, that kind of stuff.
You know, when you go ice fishing, you know, we have to do all that stuff, but you're actually having fun out there doing that stuff.
Yeah, it's different.
Yeah, when you got to go to work, I'm going to do
You're
this.
not rushing to work like, I got to get this going, I'm behind. I should have done this 15 minutes ago.
Yeah.
Yeah. Or you got to bring your kids to school and you're already late and you're like, That's when you send them out there to do it, though.
Yeah.
Yeah, when they get a little older, they can help out.
Yeah. But we got the phone lines open, so we got 4 pair of Timberwolves tickets to give away. 4 pair. So we got lots of tickets to give away. So we are going to give away a pair of tickets to the first 4 questions. Okay, so the first 4 people that either call in or text in with a question.
Real estate related question.
Got to be real estate or credit repair or mortgage or insurance.
Broadly real estate related.
Under the real estate umbrella. You're going to win those tickets. So the first 4 questions of the morning are going to win those Timberwolves tickets. The phone line is open, 651-647-2910. Again, the phone line, 651-647-2910. Or if it's too early for you, haven't had your coffee yet, and you want to text in your question, you can do that as well. So the text line is 763-443-5664. Again, the text line, 763 443-5664. The first 4 questions of the morning here are going to win those T-Wolves tickets. And if I am remembering correctly, it's going to be for the Wednesday, October 19th game against the Thunder. That's 2 pair. And then we have another 2 pair for the Jazz coming to town here on Friday, October 21st.
Awesome.
So the 19th and the 21st games is what we got tickets to give away for.
That's exciting.
Yeah.
That's great. 4 pair. That's big time.
And here's my prediction. I'm going to go on record. You heard it here first. The T-Wolves will make the playoffs again this year, and they will win the first round of playoffs. So they will make it to the second round. You heard it here first. I guarantee it. That's a personal guarantee here. So they're going to be good this year.
Yeah. They've been heating up. I mean, that team is getting strong. I mean, they've been playing really well.
Yeah. And if I believe we were talking about Rudy Gobert. They picked him up from, I believe, the Jazz. He was with the Jazz last year, and we picked him up from there this year. So the Friday game would be a good game to go to because he's playing his old team then.
Yeah.
So should be exciting season for them. So again, 4 pair of T-Wolves tickets we have to give away this morning to the 4 first questions of the morning. You can call in or text in with those questions. The call-in number is 651-647-2910. And then the text line is 763-443-5664. We got a lot to cover today. We're going to go through hot listings. We're talking here with Jerrad Havins from Credilife out of Burnsville, Minnesota. They have their mortgage readiness guarantee that we're going to talk about. Mm-hmm. And we're also going to talk about the system, if you will, that we have put together with Home Partners of America to help people get into homes. So we're going to talk about that. It's a rent-to-own process that we have in place now that we're going to talk about a little bit. Talk about interest rates. And we're going to talk about some insurance, and we're going to talk about some general credit tips as well. So we got a lot to cover this morning. Again, phone lines are open, 651-647-2910. And we had a phone call question come in.
Yeah, we've got Lachlan on the line.
Lachlan, are you there?
Yeah. How you doing, sir?
Hey, good. Good morning. Thanks for calling in. How can we help you?
Yeah, I was so my wife and I have a home. We've been in it for about 5 years, and we were curious about getting into rental properties. I'm just curious about the mortgage process on those.
So that's a great question, Lachlan. So when it comes to rental properties, I consider investing in real estate. The first home you buy could very well be your first investment property you buy as well. And here's why I say that. A lot of people will choose to buy that first home. Maybe it's a townhouse, maybe it's a smaller single family that they buy, that they live in. As their family grows or as their needs change, a lot of people will then go buy a new primary residence to live in and keep that first house that they bought and rent that one out. So the benefits of that is when you go to buy the next house, you can do an owner-occupied mortgage on the next house that you're going to buy. You can get in with as little as 5% down, and your interest rates are going to be lower. If you keep your current house, that you have now, and you want to go buy an investment property, of course you can do that still. The game changes a little bit on the loan side of things. Now you got to have 20% down in order to buy that investment property, and interest rates are going to be a little bit higher. And the reason for that is because you're not going to occupy that property. So if you ever got in a hard spot and you had to let one of your properties go, you're going to let your investment property go first, and you're going to keep your primary residence that you're living in. And so that's the reason why buying a primary residence house gets you better terms on the loan, because you're going to be living there. And again, if you get into a rough spot, you're going to keep that house that you're living in, and you would let the other one go.
That makes a lot of sense. That's great to know in terms of the difference in pricing there.
Yeah, and it's and
great.
Yep, and the with interest rates where they're at now and stuff too, the game has changed just a little bit. I mean, there's still people buying investment properties out there. Absolutely, there are. A better strategy seems to be right now, though, keep your current house as a rental. Go buy yourself a new primary residence, because then you get the better financing terms on that next house you're going to buy because you're going to occupy it, and it's kind of a win-win if you ask me.
Perfect. Thank you so much.
Yeah, we appreciate you calling in. Phone lines are still open, 651-647-2910. Again, the phone line here with any questions this morning that you have revolving around real estate. We will answer them live on air, 651-647-2910. Or you can text in your questions to 763-443-5664. All right, Evan. You got that fire extinguisher?
I forgot it. I'm going to be real. I didn't have time because I had to scrape ice off my car.
Oh, dang it.
I was in a hurry.
Why didn't you call Jerrad? Jerrad,
I'd have been up and ready.
Jerrad, buddy, I need your help. Drive to my house, scrape my car off.
I'm coming right now.
I'm going to get these hot listings ready for the show. That would have been awesome.
See, that's a good idea. Maybe we should do that in the future. Then I don't have to do hot listing stuff ever again.
You know Walgrave's up. If he's doing the show, he's up.
He's texting me right now.
You should. I think you should hit him up next week for that.
He's just trying to win those Timberwolves tickets right now.
Is that what it is?
Yeah.
Is he really calling in?
No. But he and I have been exchanging texts about the many hot listings that we have.
The 4,000 hot listings that he sent to us.
The 12,000 hot listings.
You know that caller that called it, was it Lachlan?
Yeah.
Right. That was a great question, just because, like, as you know, I work with a ton of real estate investors, and I would say that, if someone's looking to get into the real estate investment game, there's so much opportunity, especially if you're looking at obtaining properties that are going to be income producing. One thing that he could look into as well, dependent on the area, is short-term rentals. I mean, there is just a phenomenal opportunity around short-term rentals that many times well exceeds what you would get in a typical, more of a long-term rental.
Yep.
And so, like when I'm working with real estate investors, a lot of times what we're doing is we're looking at their business, because sometimes people get into it personally. And so that's one thing to look at right away. If you're looking to get into the investment game, you should definitely create your own business, whether it be an LLC. Typically it's an LLC or an S Corp, but a lot of times LLC. You create that separation so you remove some personal liability. And then when you get into the investment, that income, it becomes an income producing property, right? So you're creating cash flow for your business. And so what you can end up doing is leverage both personal credit as well as business credit and finance along the way as you grow your portfolio. And like what you talked about is huge too, because I think the term that they use out there is like house hacking, where they go through and it's like, okay, I'm going to leverage, primary residence financing because I'm going to be living in this property. So you move into that property, you get better financing. It could be a little bit of a fixer-upper or something like that, right? Then the one that you had before, now you're turning that into a rental, and you can kind of play that game too. So there really is a lot of opportunity around real estate investment. And what's nice about real estate investment as well, interest rates do play a role, but if it's income producing and if it's offsetting the payment and you're also building wealth, it makes perfect sense regardless. And
right.
So it's a phenomenal opportunity for anyone that's, motivated to do something like that.
You make a good point where interest rate and honestly just monthly cost doesn't really come into play on the investment property side of things, because as long as you can get enough rents to cover that.
Yep.
I mean, if so, take two examples, right? House number one, you can buy that. You can get a 4% 30-year fixed interest rate on it, right? But your cash flow is minus $200 a month. Mm-hmm. Or you get another property B, where your interest rate is 8% on it, but you can cash flow $400 a month on it.
Yep, you're going to take the cash flow.
Which are we going to take, right?
Exactly.
So that's the reason why you say that is, a lot of the I got to get the lowest rate or I got to this or that kind of goes out the door. It's really about the income made and the outflow going out. And if the numbers make sense, it makes sense.
Yep.
It doesn't matter what the rate is on it.
Definitely.
And if you're looking for a new place in order to put yours up for rent, you can check out our hot listings.
You can.
There we go.
Here's another thing too that we bring up. So a lot of people are like, well, my current house, they refinanced, in 2020 or 2021, got their rate down to 3%, 3.25%, whatever it was, right? It's like, well, why would we leave that house at that type of rate and buy a new house, a bigger house at where rates are at now? Well, you got to remember your cash flow that you're going to get if you keep your current house and rent it out is going to be that much greater, and that cash flow will now offset your payment on the new house that now has a higher interest rate because of where rates are at right now.
Yep, exactly.
So,
spot on.
All right, hot listings here. Let's burn through these puppies here. We got
business opportunity.
Yeah, this is business opportunity up here. So it's your chance to own a wonderful restaurant and retail space in Aurora, Minnesota. What was the business name on this one again? Evan, do you see it?
It is the
Hive, right?
Hive,
The
yes,
Hive
the Hive.
Coffee and Bakery.
Yes.
So this is a commercial building. You get the business and the building, and it's in Aurora, Minnesota. The Hive Coffee and Bakehouse, full commercial kitchen and dining service area. Windows looking out onto Main Street and on a quarter lot with extra parking available. And so this is a great opportunity here to own your own little business up there in Aurora, Minnesota. This one is listed at $590,000. Moving to Apple Valley, we have 964 Beacon Lane in Apple Valley. This is a 3-bedroom, a 1-bath home, 1,677 finished square feet, built in 1965. It's got a quarter-acre lot. Great price point on this one here. Great location. This one's listed at $325,000. Again, it's 964 Beacon Lane in Apple Valley, Minnesota. Heading to Merrifield, Minnesota. This is, we got a couple lots up there. This is lot 25 on Ridgewood Drive in Merrifield, Minnesota. I believe this is on Upper Mission Lake. If I remember correctly, yep, Upper Mission Lake here. It's a 1.4 acre wooded lot, and it's got 155 feet of lakeshore. So if you're looking to pick up a lot up there, maybe grab the lot now and build your second home, your cabin house up there. Be a great opportunity to get up there on Mission Lake on a big lot, which is 1.48 acres. So again, this one is lot 25 up on Ridgewood Drive in Merrifield, Minnesota, and this one is listed at $150,000. Going to Newport now, we have a home in Newport, Minnesota. This is at 1788 Hastings Avenue in Newport, Minnesota. This is a 3-bedroom, 2-bath home, 1,680 finished square feet, built in 1942. This one is a cute little house. Price to sell. Got some updates on there. If you look at the interior, looks like it's got almost a brand new interior, completely redone. Looks very, very good here. And this one is definitely priced to sell. $250,000. This one is listed at here. Again, it's 1788 Hastings Avenue in Newport, Minnesota. Going to Lakeville. So this is a newer listing here. This one is at 9015 187th Street West in Lakeville, Minnesota. 5-bedroom, 5 bathrooms, almost 4,400 finished square feet. And it's a newer home here, built in 2017. Got about a third of an acre lot here. And you can see it's a 2-story home. Feels like brand new construction. And it almost is brand new, being that it was built in 2017. The basement on this one is amazing. Kitchen is awesome on this one. Love that kitchen there. This one is listed at $715,000. Again, it's 9015 187th Street West in Lakeville, Minnesota. Got a new construction home in Burnsville. This one is at 13612 Sunset Hill Drive in Burnsville, Minnesota. 4-bedroom, 5-bathroom, 4,717 square feet, built in 2020. Half-acre lot. So this one is has high-end finishes, ultra-high energy efficient home, and it's a luxury home that was in the parade. I believe the fall parade this last couple weeks. Stunning 2-story, features an open concept on the main floor, large windows bringing in plenty of natural light. And the upper level features 3 bedrooms and a laundry room. So this one again is at 13612 Sunset Hill Drive in Burnsville, listed at $1.295 million. Going over to Prior Lake, this one is at 20755 Addison Drive in Prior Lake, Minnesota. This one is on Fish Lake, I believe it is. 2.5 acres. It's a 4-bedroom, 4-bath, 4,000 square foot home. It is on Fish Lake, 2.5 acres right on Fish Lake. I've actually been to this house. The lot is awesome. The house and the location is great as well. And Fish Lake is a nice lake, nice private lake to be on too. This one is listed at $775,000. Again, it's at 20755 Addison Drive in Prior Lake. Going over to Minnetonka, saw a few posts on this house this week. A few agents posted it out there. It's a super cool house, very unique, right in the middle of Minnetonka. And folks, this one, the lot on here is a 2-acre lot. So a 2-acre lot right in the middle of Minnetonka. Someone said, one of the real estate agents says, someone's got to buy this house and save this house because it is unique. It's a great opportunity. It's got on the big lot. It's just a cool house out there. This one is at 14620 Woodhill Circle in Minnetonka. A 5-bedroom, a 3-bathroom home, 3,000 finished square feet. Again, it's got that giant lot. It's sitting on a 2-acre lot right in the middle of Minnetonka. It's a 1962 built, so it's a little bit older home, but it's super cool with tons of glass. This one is listed at $599,000. Again, it's 14620 Woodhill Circle in Minnetonka. Going to Springfield, Minnesota. And maybe this is a rental property opportunity here. Maybe Havins might want to look at this one. Single family home at 609 West Central Street in Springfield, Minnesota. Folks, listed at $75,000. It's a 2-bedroom, 1-bath, 1,416 finished square feet, built in 1940. Cute little house in Springfield. Again, a single family home in Springfield for $75,000. Great opportunity there. Again, this was on at 609 West Central Street in Springfield, Minnesota. Pebble Creek Custom Homes has a to-be-built in Savage. This is on Quebec Place South in Savage. This is the one you see here is a 5-bedroom, 5-bath, 4,500 finished square foot home. Again, custom builder. You can pick what you want to do here. You want to change some of the floor plan? You can do that. You want to pick your finishings on the inside? You can do that as well. You can change the color of the outside. They're a fully custom builder. The one you see here is one they have previously built. One of their models actually had built previously. This one is listed at $1.299 million. Again, 5-bedroom, 5-bath, 4,500 finished square feet, and it's on Quebec Place South in Savage, Minnesota. Pebble Creek Custom Home has another to be built on Sims Court Southeast in Prior Lake. This is another model that they have built previously. This is a 5-bedroom, 5-bath, 2,830 finished square foot home. Again, custom builder. You can pick your finishings that you want. You can pick your colors. If you want to have that nice pink salmon wallpaper that Jerrad loves, you can pick that and put that in there too. Am I right? You like the salmon?
Very much.
Yeah. Okay, that's what I thought. This one here, as you see, listed at $995,000. Again, this one is on Sims Court Southeast in Prior Lake. Another new construction home here, up in Lake Elmo, 11610 58th Court North in Lake Elmo. 5-bedroom, 5-bath, 5,055 square feet. Definitely a luxury home here up in Lake Elmo. New construction, pretty immaculate here. I do like the color scheme on the outside of this one. I think it's super cool. This one is listed at $1.4 million. Again, it's 11610 58th Court North in Lake Elmo. All right, let's go back here. Oh, we got a great opportunity in Shakopee. This is a nice house in Shakopee. Great location, private setting in Shakopee. This one is at 2148 Kelly Circle in Shakopee, listed at $1.195 million. This is a 5-bedroom, 5-bath, 7,000 square foot home. I mean, that's even enough space for you, Jerrad.
Yeah, I think I'm going to go ahead and get that property.
Yeah, you might want to look at that one. I can schedule a private showing for you today if you want to.
That'd be perfect.
Immaculate home, 5-bedroom, 5-bath, 7,000 square foot, built in 2003, 2.5 acre lot. So not only do you get this large home, you get 2.5 acres as well. So it's a great opportunity there in Shakopee. It is on a private cul-de-sac street, listed at $1.195 million. And the last hot listing here, we have a commercial opportunity up in Duluth. So commercial building here right on First Street. It's at 327 West First Street in Duluth. So this is an historic building located in right downtown Duluth, built in 1904. It's on a third of an acre lot there. Commercial building. I'm looking for, we have 24,500 usable square feet. So it also comes with garage. I think it's got some underground parking as well. So again, a nice opportunity up in Duluth, 24,500 in usable square feet up there on Duluth. This one is listed at $1.75 million, and it's at 327 West First Street in Duluth. For more information,
We have one more hot listing.
Oh, we do.
Yeah.
What do we got?
Coming from the Minnesota real estate team. Pretty sure this is right. Let me double check. Yeah, 4967 Greenwich Avenue North in Oakdale, Minnesota. It's showing off market, but we got an email about it saying, mention it on the show. Townhouse, 2-bedroom, 2-bathroom, 2-car garage, 1,411 square feet. Going to be $235,000. For more information on this one, you can get in touch with Fong on the Minnesota real estate team.
One of Fong's listings. Fong's KL on the Minnesota real estate team. Remax Advantage Plus has that listing there. 4951 Greenwich Avenue North in Oakdale. Nice townhouse.
Yeah, great price point as well.
Yeah, absolutely. For more information on these listings or any other listings out there, feel free to check us out at minnesotahometalk.com. You can actually set up your own custom home search there. And it syncs directly with the MLS every 15 minutes, so it is live information on the listings that are available out there. You can also connect to our wonderful partners. One in studio with us today, Jerrad Havins from Credilife in Burnsville, and any of the other partners we have as well. We have Pebble Creek Custom Homes, Bella Remodeling and Roofing. We have Todd Rooker, Cover Your Assets. Is he coming on the show today?
Nah, today's the best of.
Gotcha. So listen to Todd's show after us. He's like the Wizard of Oz when it comes to financial stuff. He's the guy.
Indeed.
He's the guy behind the curtain that knows everything about everything.
Yep. Without a doubt.
Yeah. So he's amazing. It's a great show. Listen to him, Todd Rooker, after our show here, 8 to 9 every Saturday morning. We have Paragon Insurance Group. Evan Little is in the house with us this morning, answering any of your insurance questions that come up. And then all of our other great partners, Big Biggie with Nepsis. We have Jerrad here with Credilife, like I said, with Trademark Title, Urban Landworks, Spare Key, Cinch Home Services, you name it. You can find all of our great partners on minnesotahometalk.com. And you can connect with me and Jason directly as well. So we have a property home search button. We have a What's Your Home Worth button. You want to get a top agent here in the Twin Cities to do a free market analysis on your home, let you know what it's worth. You can click that button on our website there, and one of our agents will reach out to you and do that market analysis for you. Is refinancing right for you? That button has not been clicked a whole lot lately. I'm not going to lie. We still do some refinances.
Yeah.
Still, there's still divorces that happen where you got to refinance one of the, spouses off, the mortgage on the house, things like that. So you can certainly click that button. Or if you just have a general question, we have an Ask a Question button. Literally anything and everything goes through that Ask a Question button. If it's a question for one of our partners, we will route that question to one of our partners and they will get back to you there. So we have a ton of resources on our website, minnesotahometalk.com. Feel free to check us out there 24/7, and we'd love to help you out with any of your questions. Phone lines are open, 651-647-2910. The first 4 questions of the morning are going to win a pair of T-Wolves tickets. We already gave away one pair to Lachlan, who called in earlier this morning with a question. So again, that phone number is 651-647-2910, or you can text in your question to 763-443-5664, 763-443-5664.
I don't know if people noticed when we were going through the hot listings that I literally had to go all the way over to the side of the table because it was so hot.
Right?
I mean,
I had to turn your camera off.
I was like, oh my goodness, this is so
because it became an empty frame.
What's hotter, the hottest gummy bear in the world or the listings that we just ran through?
The listings.
Yep.
100%.
9,000 times hotter than the Carolina Reaper pepper, Evan, you think?
I don't know if that's the right number, but definitely hotter than the pepper.
Gotcha. Perfect. We're going to talk with Jerrad Havins here.
Yes.
You guys have a great program that we are part of as well. It's your Credilife Mortgage Readiness Guarantee.
Yep.
Right? So we want to take people who have always had the dream of owning their own home and make that dream become reality. And that's why you guys came up with your mortgage readiness program. Why don't you talk about that a little bit?
Yeah, we've been doing this now for, I think, full probably 2 to 3 months, right around that area. We rolled this out, and it's been going absolutely phenomenal. And what we've done is that we found that in the industry around credit repair specifically, there's a lot of times that maybe someone has gone through it, didn't really get the results they're looking for, maybe a little skeptical. And a lot of people, honestly, that just don't understand it. And so that alone, not understanding, they kind of are a little skeptical. But with that being said, about 90% of everyone that comes to Credilife, their goal is to be approved for mortgage, 90%. So it just shows you that that is the motivating factor, right? And so what we've done, we've been around here. I've been in the business for over 12 years now. And Credilife has been around since 2015. And what we've identified throughout that is we wanted to do something that the industry hasn't seen. We wanted to create like a guarantee around our work, not so much around, because you can't guarantee score improvement in our industry. You can't guarantee deletions or things like that. But because our approach is so strong, our model is so strong, because we focus on repair. So if you have some stuff kind of weighing you down from your past, maybe it's some late payments, collections, charged off accounts, things like that, we can work with you to help repair that and essentially help remove that off the credit report. But more importantly, what we do is we educate our clients. We coach our clients throughout the program. We help them build their credit, strengthen their credit profile. We help them with debt management. So if they have to figure out how to reduce their debt load, if maybe they need to settle out some debt and save money, like all the different things that we do, it's really a holistic approach. So with that being said, we knew look, our model is so strong that we can put a guarantee on this. And that's what we've done. We've essentially stated look, if you have a goal, if you want to buy a home in the future, and throughout our program, we guarantee that if you follow our steps, so if you work with our team, because it's a two-way street, right? We're doing a ton for you, but there's certain things that we got to do together. If you follow our program, we guarantee that by the end of it, you will be in a credit pre-qualified position for a mortgage. That's our guarantee. And if you don't hit it by 9 months, we'll either refund you or work for free. So we're backing it up.
That's great. There's no one else in the industry that's doing that either.
No.
There's no way there's anyone else doing that. And it just goes to show how confident you guys are and how good you guys are at your job. You've been doing it for a long time.
Yep.
And you guys have great systems in place. One of the key factors is, kind of like you said, it is an interactive deal.
It is.
Right?
Yep.
So the clients come to you. You can't just say, here's all my stuff. I'm out. See you in 9 months. Better be fixed, right?
It'd be sweet if it worked that way for the client, but unfortunately it does not work that way.
Doesn't work that way. But and it's kind of like the mortgages thing too, on our side, there's documents you have to get to us. Mm-hmm. There's paperwork you got to sign, things like that. But we have systems and processes in place to make it as easy as possible on you. But there's still a little effort that needs to be made. And if you follow the program, that's what it's there. If you follow our instructions, we'll get you there.
Yeah, exactly. And I also like, the fact that a lot of feedback, in fact, just this last week, we get testimonials essentially daily. Clients that get into a home, and it's just amazing. We had this one, her name was Jennifer, and it was on our BBB profile. She put a testimonial, and she talked about her hesitancy. So in the very beginning, she had worked with another company in the past, didn't go well. And then she came over, decided, hey, she actually joined our credit repair group. So we have a group on Facebook called Free Credit Repair Advice. And right now we have close to 80,000 members. And so what we do, our team and I, we educate people in there. It's like an open community forum, so we're educating people on the process. We actually give away free templates for credit repair. We give away a lot of stuff in there. So she found that group. That's how she got introduced to Credilife. And so she saw our approach and how different it was. And so in the testimony, she actually talks about what she experienced throughout the program. So not only did we help repair her credit, we helped build her credit. She has a better understanding of how credit works. And on the financial side, because we really work with our clients in financial wellness too, just her experience of coming out and feeling more confident. Not only did she get in a home, she feels confident that she actually can afford the mortgage payment. She feels set. And that's why I wanted to bring that up, because our program really is that. You're going to learn a ton. When you engage, you're going to have a better understanding of money and credit, which really arms you for your future. So it's there's nothing but positive in this, but once again, it's that two-way street, right? It's a partnership. You got to engage. You got to, if you don't understand something, ask questions. Our team is there. But as long as you do those things, you're going to succeed.
Yep. The thing I love about you guys is the education piece of it. Because if you think about it, the credit score, so your credit score is a scoring model that basically rates your or tries to predict you if you're going to have a 90-day late show up or not.
Yep.
Right? So that's how the credit scoring algorithm is formed. It's like this score, the higher your score, the less likely you are to have a 90-day late show up on any sort of account on your credit report. I always explain it that your credit score is basically measuring your financial habits.
Yep.
Right? If your habit is to make payments late or carry high balances on credit cards, things like that, your score is going to be down. If your habit is to make payments on time, keep your credit card balances low, things like that, you're going to have a higher score. You guys do a great job of like, hey, here's your habit right now. When you guys look at someone's financial profile, you guys are looking at it, say, here's what your habit is. We got to try to change those habits into this.
Yep.
And if you can do that, you're going to be set, right?
Yep.
And it's not only just, hey, you're going to come in and, hey, we're just going to do a quick fix on your credit. Your score is going to jump up. You're going to get whatever you want to get maybe at this point, but now it's going to go back to the way it was. I mean, it's kind of throwing like a Band-Aid on an axe wound, right?
Yep.
You guys do a great job of identifying, okay, here's your habits, and we gotta work with you to try to change those, and so that moving forward, those good habits continue.
Yeah.
And then you guys are set up for success in the long haul.
Exactly. And like in a lot of our clients, like they can get to the goal quickly too, like what you talked about. So like that is, that's the issue in the industry is what you just said. So a lot of companies focus on just the repair portion. So basically what that is they're doing investigations. They're essentially disputing information on your credit report in an attempt to remove it off your report if they're unable to verify what's being challenged. So at any point the bureaus are unable to do that, comes off their report because they can no longer sell that information. Well, a lot of times, especially with collections, this is a big one. If you go through that process and let's say they remove some collections off your report, well, collections get bought and sold quite often, sometimes every few months.
Right.
And so, like, let's say you've gone through that and we've got the Band-Aid. Ooh, score popped up. Oh, good. Let's start the mortgage process now. You're going through the mortgage process. You have to shop for homes. You have to go through that process, get a contract approved. And then all of a sudden, okay, now I'm starting the mortgage process, 15, 30, 45 days, whatever that looks like. All the time, this happens to people. They go through that and things pop back on. These new collections. So the collection got sold. The new company now reports it. And boom, scores tank. And just imagine being in that position, right? You especially if you've either been renting or you put your home up for sale and it's sold, right?
Right.
Maybe it's contingent on this new place. Imagine being in that position, how stressful that would be. And that's the reason why, like, I get so passionate about this, is the approach in the industry is just wrong. I mean, it is. We got to do this the right way, and that's what our program does. It's the hard way, but it's the real way. It's almost like when I'm talking to clients, it's like we're the gym, we're the trainer, we're the dietitian. But you got to be with me. You got to work out and you got to eat right.
Right.
Like, and then we'll get there. Guaranteed we'll get there if we follow these steps.
Yep. Yeah, it's a great program. Phone lines are open 651-647-2910. We still have 3 pair of Timberwolves tickets to give away to the next 3 questions that come in. You can call or text us with your questions. Phone line again, 651-647-2910. You can also text us your questions, and that will also get you the T-Wolves tickets. That text line is 763-443-5664. Again, 763-443-5664. Continuing on the credit side of things, someone comes to you and says, hey, Jerrad, what's your top 2 or 3 tips that you, just in general, that you would give? So someone wants to increase their credit score or work on their credit, repair their credit, if you will. What are the 2 or 3 top tips just that someone can do on an ongoing basis that will help their score up?
Oh, for sure. That's great. So, the first one is debt reduction on revolving accounts, so credit cards, or just really the overall management of credit cards. So a lot of times, and I understand the thought process around this, because let's say you got your credit card $1,000 limit, you use it to buy some groceries and some gas. You get your bill,
which in today's world,
it would be
eats up about $1,000
easily,
right?
Yeah, and so then you get your bill right in the mail, and you're like, okay, great, I'll pay this off in full. Well, the thing is, the information on that bill, on that billing statement, is what was already reported to the credit bureaus. That's what shows up on your credit report. People just assume, and it's not a bad thing, but I get it. Oh, my payment, when I pay this off, that's what's reported. So if I pay this off, that's what's going to show up, and that's not the case. And so the number one tip that I always give is immediately we have to change how we manage credit cards. And it really depends on the type of person. If like, let's say it's a business owner, we're talking about this morning. If it's a business owner and if we're leveraging credit card for like perks and certain things like that, well, then what we would do with that client is advise them to pay that balance down. And if they're looking to buy a home in the future, we'd say pay that balance down to 3% of the limit 3 to 5 days before the statement closing date, not the due date. So what I mean by that is that you look at your statement, you have a due date, but you'll actually notice on the statement, they'll say like a billing cycle end date or statement closing date. That's actually when they generated the bill. So what you'd want to do is pay that down 3 to 5 days prior to that date each month. And then what you're doing is you're creating a predictability of what will actually be reported. You're controlling it. And so when 3% is going to pop up the score the most, guaranteed. So that's one thing we do there. But that's for like a business owner, and they're using it for perks and miles, right? Rewards, things like that. But we're still looking to pop up the score.
Yep.
If I'm more of a standard, W-2, I just use this for here and there things, then what I would recommend doing is like, look, let's now use this as a tool only. This is going to be a credit improvement tool only now. So what we'll do is we'll have them go through, let's pay down the card, and then let's just tie like a low subscription payment to it. Like Netflix is perfect. Say, hey, got this $1,000 card. I'm going to put this $20 a month payment on there, and that's all you use it for. Every month, just pay it off in full as you normally would, but on or before the due date. Now we've controlled it where it's only going to show that $20 balance out of the $1,000. So therefore we're showing that low ratio, and we're always maximizing scores. So that's the biggest one. I put a lot of detail on that one, so I hope I didn't confuse people. But I'm just saying, like, the biggest one is this. Credit cards are by far the easiest thing to mismanage, and it can greatly impact your score. It could put it in swings of 50, 60 points easy.
So I actually worked with a gentleman who had one credit card open, right? So one credit card and 2 installment accounts. So there was a lot of weight thrown on that one credit card. The revolving accounts will swing your score more because it's one of those things where you can draw from it, you can charge more from it, and you can pay it down as you wish. It gives you the flexibility for that. So again, it's that habit. How good are you managing that card, right? That's why it can swing your score the most.
Yep.
I taught him that trick, right? So he came in, he's like, hey, my score is here. And I said, really, to be honest with you, you got to do one thing, and you will see a completely different credit score the next month. Don't charge everything up on your card like you normally do, but don't wait for the billing cycle to come out, right? You find out when that billing statement ends, and then you make your payment beforehand. He did that, right, the next month, and paid it all down. His score went up 81 points.
Yep.
From one card.
Yep.
Right? And it's the truth. Like, people are like, 81 points. Yeah, right. It happens, right? And so managing your credit cards correctly, it's
huge.
And it's easy to do. It's easy to do. It's just got to get explained to you. Set a calendar reminder. Set up an auto payment, however you want to do it. You can literally kind of set it and forget it type of deal.
Yep.
And you will see crazy improvement in your score.
I know. That's the biggest one. I mean, it really is. That to me is like the once again, like the most straightforward way to have the most control, you know what I mean, of your score. Obviously the next one is making your payments on time. That's a given, right? And I would say this too, a lot of times, people have reached out and are like maybe a little bit worried, like, oh, I'm late on my payment. Is it going to report? You just have to remember that there's a difference between being late with like that, let's say a credit card directly with the creditor versus going 30 days or 60 days or 90 days delinquent. So like, as I talked about before, when they generate that billing statement, they're doing that roughly every 30 days. So that's why the first late that actually reports on a credit report is 30 days, is because if they generate that new statement and that payment still has not been made, that's when it's going to report that 30-day delinquent. If you were a few days late or 10 days late or whatever it is, as long as you make that full amount, and if there is some sort of fee, you pay that fee as well, you're not going to have a 30-day late. So that's important to know, but it's very important, just financial habits like you talked about.
Right.
Just getting more in tune with your budget, awareness of your spending, where you're not late at all. Where you can actually forecast out and make sure your payments are covered. I think that's the big one. But payments on time is a big one. Here's another big piece too, to kind of piggyback on what we're talking about. There's also a misconception around paying down debt and which ones to focus on. I've had a lot of people assume like paying off or paying down an auto loan would improve their scores. And that's simply not the case. So paying down an installment account early does not improve scores. That's a big one.
An installment account's just for you people out there who maybe not know what that means. So that an installment account is basically you have a loan out there with a fixed number of payments, right? Like a car loan. It's a 5-year car loan, right? You have 60 payments. Once that 60th payment is made, The loan's closed, it's done, it's paid off, and you can't go back and like borrow more against that loan or anything like a credit
Exactly.
card. So student loans, auto loans,
Mortgage.
boat loan, a mortgage is an installment account. Anything that just has a fixed number of payments where it's not that revolving type of account would be considered then one of those types of accounts.
Yep, exactly. And a lot of people have done that, and it's just because they'll do, there's a lot of information out there on the internet. Like, it's just, people are bombarded now with credit information, and it's very confusing. And I've had a lot of people come to me like, oh, I paid this down, I'm trying to improve my score. And it's like, well, unfortunately, on the auto loan, paying that down early, it doesn't impact the score. In fact, when an auto loan or an installment loan is closed, a lot of times after that, scores may actually go down. Just because, the scoring algorithm is based on the amount of accounts. You want a mix of accounts. You want revolving. You want installment. Like, I always compare it like when you've heard the term, diversify your portfolio for investments. It's the same thing in the credit profile. You need to diversify the credit profile. So, like, they want to see that. So if you have like an installment account that gets paid off to zero and you don't have enough history or active accounts in there, scores could easily drop. So that's another big one too. And I think in that case, like if someone is looking at to do that, the only benefit would be like if they're working with you and they're trying to better their debt to income ratio. And if they could afford to pay that down, that might be a thing to look into, but it will not benefit the score.
Phone lines are still open. We have 3 pairs of T-Wolves tickets to give away yet this morning to the next 3 questions that come in. Phone lines are open at 651-647-2910. Again, 651-647-2910. Or you can text us with your questions at 763-443-5664. Again, the text line is 763-443-5664. Evan.
Yeah.
So your insurance.
Yeah.
Okay. Few people know this, but that your credit score can also affect insurance rates.
Oh, yeah.
Correct?
Big time.
So why don't you talk about that a little bit?
I mean, what it boils down to is everything in life at this point is looking at your credit. Your job, like, oh, you're applying for new jobs. Oh, they're definitely going to run your credit on a background check. And insurance isn't really any different. Your credit score is factored into what they'll call an insurance score. So like me as an insurance agent, I don't see your credit information. What I see is what the carrier thinks of your credit information. And so they have their own metric. You've got Experian and all that stuff. And that number will go through whatever the carrier is looking at and factor against your address as well, because they're not only looking at what your financial situation is, but what's the likelihood that you're going to make a claim based off of that financial situation. So if you live in an area where it's really unlikely that you're going to make a claim for any sort of natural disaster type stuff, there's just no weather where you live, basically, then it matters less, because here we have hailstorms, and in Florida you have hurricanes, and in California you have earthquakes, and so on and so forth. And so if you are someone who is in a more financially stressed position, you are more likely to make claims, particularly at that mid-size amount. Anybody is going to make a claim if their house burns down. They know that, right. Obviously. But if you suffer something like, let's say, about $10,000 worth of damage, some people are going to say, well, it's not worth it to make a claim because my insurance rates will go up and I don't really need that and I can afford to pay the 10 grand out of pocket. Those people are going to tend to be the people with higher credit scores. So what they do is they go, well, we know that people with higher credit scores are likely to absorb more mid-sized losses, so we can offer them reduced rates. So it makes sense when you think about it, but it's just one of those extra ways that having a bad credit score is going to potentially punish you in the long run.
Yep.
So, and going along with that, so, the hurricane that went through Florida, I've got a lot of questions this week of, well, how, is an event down there going to affect our insurance rates up here or other parts of the country?
The specific answer is kind of. The real answer is no, not really. Losses are generally localized state to state. Something like that, obviously, we're talking about billions and billions and billions of dollars in losses. But a lot of that is on carriers that are only operating in the state. For instance, The biggest insurer right now for homes in Florida is actually the state of Florida through their Citizens program, which is the insurer of last resort. And that just means that it goes into the reinsurance market, which, yes, in aggregate, it is claims. All the insurance companies are basically getting together in this pool and paying for the claims. But it's not so out of line that it's going to cause real disruptions in the market. The things that are driving up rates are inflation, they're local storms. I mean, the rate classification of your property is driven mostly by how likely it is that you're going to suffer something that causes you to make a claim. So here in Minnesota, it's what does the forecast look like for severe storms in Minnesota?
Yep.
Not so much in Florida.
Very interesting. All right. So other tips, as far as general insurance tips goes, I asked Jerrad, it's like, what are your top 2 or 3 tips, to increase your credit score? What's your top 2 or 3 tips for someone's like, how do I keep my insurance costs down? What can I do on my end to keep it down? Obviously, keeping your teenage driver off your auto policy is probably a good one. But
well, you say that, but you actually can't really keep them off. This is a common misconception, right? If you have a 16-year-old in your house and they have a driver's license, they are required to be on your policy. End of story. You don't have a choice. You can get them a separate policy, and then on your policy, they're no longer a primary driver, but they're just a rated household member. But you're going to be paying for the fact that they know that it's a family member. They are potentially going to use your car. It's going to cost you. And it's going to cost you a lot.
That's good to know.
I didn't know that.
Yeah, family members in Minnesota, you cannot exclude them under 99.9% of circumstances in Minnesota. Some states you can exclude family members, but me as an insurance agent, I say never, ever, ever exclude family members. Because what most people don't understand is so liability insurance travels with the vehicle. Whatever is the policy on that vehicle is the policy for liability when that vehicle is being driven. Generally speaking, you have the ability to loan your car to someone and your insurance covers them, right? Let's say Jerrad doesn't have insurance of his own, but he has a license. He just doesn't own a car, so he doesn't have insurance right now. And he says, hey, I need to borrow your car to go to Home Depot because I want to pick up a couple of buckets of paint. I go, great, no problem, man.
And salmon wallpaper.
Yeah, exactly. Mm-hmm. He's going to get the salmon wallpaper.
And a scraper.
Yeah. And a scraper.
and so I go, yeah, absolutely, man. You're cool. You can borrow my car. Because I have given him permission, my auto insurance covers him.
Okay.
As long as he doesn't live with me and I'm not committing insurance fraud by hiding that he's the one that's actually driving the vehicle all the time, that kind of stuff, it's a non-issue. Insurance companies get it. It's the law. It's normal. Now, if I explicitly exclude someone, let's say he does live with me and he has a bad driving record. And so I say, listen, Jerrad is never allowed to drive my car. I'm excluding him as a household member. He under no circumstances will drive my car. Now, what that means is if I do loan him my car, he has no insurance, period, ever. And so if you exclude a family member, the truth is it's very likely that you say, oh, yeah, we can exclude them. The teenager's never really allowed to drive my nice Porsche. That we can exclude him from the policy. It's no big deal. And then the kid's car breaks down and he needs to go to school. And it's like, yeah, you can borrow it for just for the next 2 days while your car is being fixed. It's not a big deal. Just, you got to come home right away. And then the kid gets into an accident in the parking lot. They don't have insurance. Your car is not covered. Your damage is not covered because now you had an excluded person and you gave them permission to use the car. And now it's like, no, we don't touch this.
Yeah.
If you're
Yikes.
lucky, the insurance company will cover it and then they'll cancel your policy. So don't do it. Don't exclude people from your policy. If there's any realistic
Probability
situation where they could be driving your car, don't do it. Please.
Please don't do it.
Yeah, that was good to know. I mean, we have Riley in our household is 16, but I know that she's on our policy, so we just did that. But that's actually really good information to know.
I didn't know that.
It'll happen automatically. This is the thing that most people don't know is that your kid gets a driver's license. The next time that your car insurance company runs MVRs for people in the household, which is the driving records, it'll just show up. And they'll be like, hey, you didn't call us to add this person. We're changing your rates. And we're adding this person to the policy. and this happens all the time with people that live in apartments, where they conflate the different units. And so you'll get a letter that says, you didn't tell us about these 8 different people that live at your address. You go, I don't live with these people. I have no idea who these people are. So you have to call the insurance company or your insurance agent and say, yeah, they're trying to rate me for all these people that I don't live with. I think they're my neighbors or whatever. Run into that a lot.
Gotcha. So, okay, so is there some sort of grace period that you have? So let's say, I got a daughter that turns 16 on January 10th coming up this year. And let's say I don't contact my insurance company to say, hey, she's now got a license, need to add her, right? So it goes, 30 days, before I'm triggered like, oh, I should probably add her to my policy, because that's not the first thing you think about on a 16th birthday is like, let's call an insurance company and do whatever, right? So is there like some sort of grace period? Like she gets her license right on her 16th birthday, and the day after that, she's in a vehicle and she gets in an accident. Like, is she covered because there's like a grace period type of deal?
Yeah, you're fine. In scenarios like that, generally speaking, you're fine. The issue comes into, is it like within a little bit, no big deal. If she's 17 now and she's been driving a car and you haven't put her on a policy for a year, now you're in that territory of willfully hiding stuff from the insurance company. Okay. Obviously, we're not going to run into that because Mike's my client, but
he's like writing it down right now on the calendar. January 16th, January 10th.
Yep, he had his CRM up to do the update note.
No, it's one of those things where reasonableness and good faith comes into it. Obviously, the first thing that you're going to do is not call the insurance company and go, oh, it's time. But if you run into that situation, and you'll see that sometimes what will happen is they'll say, yeah, we're going to cover this claim, but this person should have been on your policy for a year. So we're going to say, hey, this look back period is X amount under the contract, and we need you to pay the increased premium for that amount of time. And it can be a lot.
Okay.
I would say the best practice is if someone's driving a car, they should be added to the insurance policy.
Oh, for sure.
Be on top of it.
We
did have a text question come in. We're giving away 2 more pairs of Timberwolves tickets now because Russell just scooped up a pair by asking us a question. Text us at 763-443-5664. That's 763-443-5664. The next 2 questions we get are going to win tickets, but we're like out of time, aren't we?
We are.
Oh, man.
Time always flies on the show.
We need to make this a 2-hour deal.
Yeah, Russell, I'll tell you what. This is a great question. I'm going to give it to Jerrad, and he's going to get in touch with you after the show.
That sounds good.
I like it. Thanks for listening, everybody. We're here every Saturday, 7 to 8. Getting a little short on time here, but we appreciate you guys tuning in. We'll be back next week.
The views expressed were not necessarily those of the management or KSTP-AM 1500 ESPN. You're listening to 1500 ESPN on KSTP-AM 1500 and 94.5 HD2 Minneapolis, St. Paul.